Hello everyone, and welcome back to the channel. Today, we're taking a deep dive into Canopy Growth Corporation, ticker CGC. If you're interested in cannabis stocks, market trends, or just want to stay updated on a company that's been at the center of the cannabis industry's ups and downs, this video is for you. Over the next 18 minutes, we'll cover everything you need to know about CGC, its business, recent news, stock performance, financial health, insider and institutional activity, analyst opinions, and what the future might hold for this industry pioneer. Let's start with an overview of Canopy Growth Corporation. CGC is one of the largest and most well-known cannabis companies in the world, with operations spanning multiple continents and a product portfolio that includes medical and recreational cannabis, hemp-based foods, beverages, and wellness products. The company is headquartered in Canada but has a significant international presence, making it a true global leader in the cannabis sector. Now, let's talk about recent news and developments. Canopy Growth has been making headlines for both its strategic moves and its ongoing challenges. One of the most notable recent developments is the company's continued focus on streamlining its business and divesting non-core assets to improve its financial position. For example, Canopy has been executing arrangements to increase its ownership in certain strategic investments while divesting others, such as its stake in Canopy Rivers, in exchange for increased ownership in Turasend and Vert Mirabel. These moves are part of a broader effort to focus on the most promising opportunities and simplify the company's structure. Additionally, Canopy Growth has entered into a $20 million loan agreement with Arise Bioscience, a subsidiary of Turasend. This loan is secured by Arise assets and carries an interest rate of 6.1% per annum, maturing in 2030. The proceeds are intended for general corporate purposes and debt repayment. Importantly, this arrangement does not involve any cannabis operations in the U.S. until such activities are fully compliant with U.S. federal law. On the branding and partnership front, Canopy's BioSteel brand has secured a multi-year partnership with the Toronto Raptors, making it the team's official sports drink and presenting partner for Raptors training camp. This deal will give BioSteel prominent branding at home games and training facilities, further boosting the brand's visibility and market presence. Let's turn to stock performance. CGC has experienced significant volatility over the past year, reflecting both industry-wide challenges and company-specific news. The stock has traded in a wide range, recently hovering around $1.24 per share, with a 52-week range from 77 cents to $8.65. This highlights the dramatic swings that have characterized the cannabis sector as companies navigate regulatory uncertainty, changing market conditions, and ongoing financial pressures. In recent months, CGC shares have faced additional headwinds due to concerns over legal costs and potential damages from class action litigation. For example, on a recent trading day, the stock slid roughly 5.6% as investors reacted to news of increased legal expenses and uncertainty around potential settlements or judgments. This has added to the cautious sentiment among investors, who are also awaiting quarterly earnings and management commentary for further clarity on the company's outlook. Let's dig into the financials. Canopy Growth recently reported its fourth quarter and full-year fiscal 2025 results. Excluding net revenue from businesses divested in the previous fiscal year, net revenue for FY 2025 decreased by 1% compared to FY 2024, primarily due to lower sales in Canada. However, management highlighted notable improvements in adjusted EBITDA and cash flow, as well as continued efforts to strengthen the balance sheet. The company's leadership is optimistic about achieving positive adjusted EBITDA in the near future and positive free cash flow over time, as they focus on expanding global medical cannabis operations, enhancing margins in the Canadian adult use market, and further streamlining costs across all business areas. Despite these improvements, Canopy Growth is not yet profitable, and the company continues to face significant challenges as it works to right-size its operations and position itself for sustainable growth. Now, let's look at insider and institutional activity. Insider trading data shows a pattern of sales by directors and executives over the past year. For example, multiple insiders sold shares at various price points, with sales occurring at prices ranging from 92 cents to $9.94 per share. These sales are not unusual, especially for a company undergoing significant restructuring, but they are worth noting for investors tracking insider sentiment. On the institutional side, there has been some rotation in ownership, with some funds reducing their positions and others increasing their exposure. This mixed activity reflects the uncertainty and volatility in the sector, but it also shows that some institutional investors remain engaged with CGC as the company works through its transformation. What are analysts saying about CGC? The consensus rating among analysts is currently a sell, with 2 analysts providing ratings and setting a 12-month price target of $2 per share. This represents a forecasted upside of about 61% from the current price, but it's important to note that the analyst coverage is limited and the outlook remains cautious. The average price target is $2, with both analysts setting the same target, reflecting a lack of divergence in opinion at this time. Analysts are generally waiting to see more evidence of a turnaround and clearer signs of sustainable profitability before becoming more bullish on the stock. Let's talk about technical analysis and market sentiment. Technical indicators currently show a weak trend for CGC, with the stock trading well below its key moving averages. The overall sentiment is cautious, with investors weighing the potential for future growth against the company's ongoing challenges and the broader volatility in the cannabis sector. Let's look at some of the risks and opportunities for CGC. Risks. Regulatory uncertainty. The cannabis industry remains highly regulated, and changes in laws or enforcement could have a major impact on Canopy Growth's business. Financial challenges. The company is not yet profitable and continues to face significant financial pressures. Legal exposure. Recent concerns over class action litigation and increased legal costs have added to investor uncertainty. Volatility. The stock is highly volatile, which can be risky for short-term traders. Opportunities. Strategic partnerships. Canopy Growth's partnerships, such as its relationship with Constellation Brands and the Toronto Raptors, provide valuable support and visibility. Streamlined operations. The company's focus on divesting non-core assets and streamlining its business could improve profitability over time. Global reach. Canopy's international presence gives it access to multiple growth markets as cannabis legalization expands. Brand strength. The company's leading brands and innovative product. As always, it's important to do your own research and consider your risk tolerance before making any investment decisions. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you don't miss our next update. Thanks for watching, and see you next time.